All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. For the challenge, I'm all cash right now and looking for the next trade. And there's some nice setups out there. There really are some nice setups from a pure technical standpoint. And let me show you some of those here that I'm looking at, and show you why I'm not going to get into them because it's one very clear reason. And here's the UUP, here's the U.S. dollar, and here we go. It's nice little rounding top action going on, right? Here we just have the rounding action, and a lot of times these are met with some very heavy heavy flush actions here, breaking below the lows from the last month and a half. You know me, I'm a dollar bear overall. And, we have the MACD pushing below zero for the first time in months. And it is just a very nice position from a technical standpoint here with the, with the U.S. dollar. And, all right, let's go buy some puts, right? And let me come in here, and I'm going to buy some puts. And, this is next week's options. These are the regular January monthly options, the ones that should have the best spreads. And I can either buy 25 out of the money, which chances of getting down there are very slim, or I can buy the 25.50 in the money, and I'm dealing with a 8-cent spread on a 25-cent option. Okay, just go deeper in the money. All right, here's the 27 option. 19 cents to 2.88. 26.5, 90 cents to $1.90. And it's just not tradable. All right, fine. You want to trade the dollar down. You want to be bearish on the dollar. Well, obviously the euro's got to go up in that time, right? So let's just go buy some euro calls. Well, we have the same thing. We have the same ridiculousness in terms of spreads. And, I'm not too surprised by it. But we have, those spreads are quite a bit open, here overall. So, all right, not really going to be able to trade the currency. There's a couple backhanded ways I could do it. But nothing that nothing that's screaming there. You can always go take a look at something like the yen, but that's not a yen up, dollar down type of scenario. It is one of these scenarios where we have seen a big pop in the yen, and to see the yen really come back to earth would not be a big surprise. I did look at the put options here, but you can see the spreads on them. They're just, it's just for the challenge, not tradable here for me. All right, great. Some individual stocks, and there's some interesting stuff going on out there. And I know I sold my Under Armour, so obviously I'm bearish on the market now. No, I'm not. My trades, I had Under Armour trade shouldn't say anything about my opinion on the market one way or the other. But I look at Honeywell, and I start to break down some of these charts on an hourly basis. And while, yes, they seem a little overbought on a daily basis, on an hourly basis, they've had some of that, overbought. They've come on back down. Here's Honeywell back down to the 7-hour. Nice little closing candle starting to emerge here with Honeywell. All right. Great. Let's go grab some Honeywell. And, I come into the options and I take a look and I go, okay, I know they're going to be expensive, right? The implied volatility is going to be higher than usual, but it's actually not too bad. It's actually pretty darn good. And then it's Honeywell. And sometimes the spreads on Honeywell are really easy, and sometimes they look like they do today. They're just not tradable. Just absolutely not tradable there. 250 for the bid, 281 is the ask, and so can't really do it. Can't really do it. Facebook, similar hourly chart as Honeywell, right? All right, come on in here a week. $4 for the at the money option. Okay. All right, they're having a giggle, right? All right, that's just pretty darn expensive there. And with some of my favorite setups, that's what we're looking at. In terms of option value, I have taken a look at possibly getting back into Under Armour. And the option spreads on Under Armour are very good. The implied volatility is 58, which is a high even for Under Armour, but the spreads are pretty good. I could buy these 18s here. It's got a delta of 67 cents. Yeah, I could go after them, and I think I'd be okay. But just where it is on an hourly chart basis, I think I can get it cheaper. And when I look at what the market has done and how the market has overall been, I would not be surprised to wake up to a nice little buy opportunity, on some sort of small dip. But obviously, the next bigger move is going to be, going to have some trade war news associated here with it. So, for me, going into this close here, with where some of these options sit, where some of these charts sit, like a Boeing, I'm going to go in with cash. There are some very interesting things that could set up early tomorrow morning. To be able to go after, fairly aggressively, whether it be on a gap down in an initial type of sell, or whether we get some sort of hold up on things like a Visa, like an American Express, that help them to continue on higher. American Express, I expect to go and hit 100. This is one where, let me go take a look at the options on this again. They're not terrible. But American Express is one of the early earners, so it does have that priced into them a little bit. But these are a lot better than other scenarios out there in the market. But a 50-cent delta on a 250 option means I need a $5 move to double my money, assuming there's no time decay or implied volatility. So that's talking about it up here around 103. For a double. That's the type of move it needs. And could it have it? It sure could. But man, these are needing some big moves. And if they don't get those moves, we're going to continue to see some compression in those options. And so, while yes, I really would like to jump on into something here before the close, I am going to. I am going to hold off and wait until tomorrow morning to reassess things. Now, one last thing that I want to talk about and bring up here today is this idea of a January effect. I was asked about this earlier, and I'm sure it's all over the TV and all over some of the news and blogs. I've seen it in a few spots, and there's this idea in the market called a January effect, where as goes January, so goes the year when it comes to the markets. It's a neat concept, and if you look at it for a long period of time, it holds a little bit of water. But if we just bring out a little seasonality here on the market, and we come and take a look over the last 20 years, January has been one of the worst months. It has been up half the time. It has been down half the time. And, June, September have been the only 2 months that have been worse than January over the last 20 years. What has the market done over the last 20 years? Well, it's markedly higher, right? If we go back and we just look at, we just come in and take a look from a year-to-year basis here when it comes to this whole concept of the January effect. Let's just come in here to last year. We'll go, from the first of, 2018. We click on update. Oops, that's only one day. Sorry about that. Here we go. This is January last year, right? Big up early on, big down, ended the month pretty much slightly lower, right? You could say, well, yeah, and now the year ended a little bit lower, and you'd be dead right. But did it really have anything to do with anything? No. It really didn't. And we can come in and we can look at year after year, and that same thing. I think it's just one of those old notions, just very old notions in the market. Yeah, January that's up. Here in 2017, and yeah, S&P was up in 2017. If we come in here to 2016, we could see. Let me pull it up here. You could see that the market had a very rough January. January was down big in 2016, and the market ended substantially higher. January effect, it's just something that over the last years, or heck, even during my trading lifetime, has just not seemed to have much of just not seemed to hold much water, right? January down, here in 2015, market ended flat for the year. Okay. Was that, based because of January and what happened in January, or, very highly coincidental and other things happened throughout the year that, that actually really drove things, right? I think the overall, and here's 2014, January, ugly, ugly, ugly January. 2014, market up big. I mean, amazing. So, look, if we're going to sit here and we're going to say, well, January's up, so the rest of 2019 is going to be up, I think it's one of the most illogical type of these notions out there. It's one that doesn't give any sort of play for, for change. Doesn't give any sort of, any sort of real reasoning, behind it. And it's one of those where you could actually argue and make an argument that January selling actually frees up fund managers to be net buyers more throughout the rest of the year. January buying forces them into a little more of a sell position. It's not a great argument, but that argument can be made. And so it's just one of those notions. Great, let's go out at night. Let's go stare at the stars. Let's look at the alignment of the stars, and we'll say, well, because of that alignment, the market's going to do this. I think that's where it falls in terms of realistic usefulness when it comes to trading in the markets, and especially when it comes to trading options here overall. So anyway, that's my 2 cents on the whole January effect. That, hey, you know what, if this January is higher in the markets, 2019 is going to be a great month. Let's face it, the markets haven't rallied because of something, special for January and for 2019. And, 2019 could be a huge year, but it's not going to be because it rallied the first few days of January. Right? It's going to be because there's trade war resolution, and because earnings grow, and because economics start to tick up, and because yield curves start to steepen. It's going to be because of those factors, not because of a few trading days in the front of January off of an incredibly oversold market at the end of 2018. So my 2 cents on that, and obviously, you probably get the notion that I don't subscribe to it very much at all. As we head into tomorrow, if there is no news in terms of trade war, if there is no news, I do suspect that the markets will gap down. I think no news will create some jitters, will create some angst, but the chance of having no news is pretty slim. There's going to be some speculation. There's going to be some talk about who and what, and leaked ideas and leaked concepts about it, and that's going to be a reality. And so chances are pretty good we will have a gap here tomorrow, based on one of those things. And so I'm going to go into the closing cash and take a look at where things are here tomorrow morning, and look to get this challenge off and cooking. Thanks for hopping on. Have yourselves a great one, and we'll talk to you tomorrow. Take care.